What is going on, guys? Good morning. Welcome into another live stream. Hope you guys are having a good morning and pretty nice rally, right? We called it out really nicely on the live stream on the previous, I want to say, Wednesday and Monday. And yeah, it's been a blast covering the market with you guys back here, and I appreciate you guys turning up and just coming through. So we have definitely another week next week, which will be a jam-packed week. We have FOMC earnings reported by big mega caps. And then more economic data that's going to be coming out. 75 basis point rate hike is priced in at some point at this juncture. So we're expecting a 75 basis point rate hike next week for the FOMC meeting. That should be no surprise just yet. But the breakout on the SPX and NASDAQ has been pretty, strong so far. We're seeing a lot of contrarian plays being put together, and the shorts are continued to be squeezed. We are, however, seeing momentum start to slow here. As you can see, the candlesticks are starting to get tighter, starting to get more rangy, and therefore a pullback or a rejection at this level, the 3990, is possible. But of course, we're going to play pivot to pivot and see what happens as this market unfolds. As I have mentioned before on the previous two live streams this week, we are playing a pivot to pivot, and we are not going to try and guess what's going to happen. As long as we see a rejection in this range, then we can start to take some hedges to the downside, and we can position ourselves for a pullback here back into the 3920s. And the 3920s will be the support for this rally of some sorts, and that will be the next level that we'll be looking at for a bounce next week. But however, I am of the opinion that we are likely to digest this move and move sideways for a little bit before finding either a break to the downside or the upside. And then ahead of FOMC next week and earnings, it should be a lot for the market to digest, and the market is likely to not make any rash moves or rash decisions either way, and therefore we have to be objective still. Of course, if you played Nvidia, congratulations. That was a huge move this week, almost $40. The stock is up massively this week. We've been covering it all week on this live stream, and we hope that you caught a piece of the action. Of course, we did catch a piece of the action on the Discord, and we were wishing that we caught more of it, but I sold my SMH calls way too early this week, but it's okay. We caught some of it, and that's good enough for me. There's no need to be greedy, right? We are also in some other trades that we're looking for bounces, and we'll see how that plays out today's session and then into next week. We don't have any expiries that are today, so we'll be looking at some opportunities, and I'll kind of highlight some opportunities as well in this live stream as usual. So let's kind of do a technical update on SPY and NASDAQ, and then we'll go from there. NASDAQ is mainly the one with more upside here. You can see that we still have a gap to the 12,814, and that's going to be the resistance for the NASDAQ in this coming session. So if anything, we see that pull into the 12,814 and then a rejection, and that would mean that SPY would also kind of get pulled up a little bit more, perhaps into the 4026, 4020, and then see a possible pullback. With SPX in this range, we need to see a pretty strong rally up into 4060 for us to see a rejection, and 4060 is the next level at which we'll see any kind of a pullback or a zone in which we'll see rejection. This is now going to become a dual zone, and we'll see if this becomes a resistance zone in the next few trading sessions to come. So that will be something that we'll be watching closely. And yeah, straightforward. NASDAQ pulling back up here, and we'll see if we get rejected in this zone. And then if we break out of it, then, above the 12, let's just say 1300, right? It's a safe level for us to assume that this bull rally is going to be restarting, and the engines of the bull are going to be climbing the wall of worry as usual. So that will be something that we'll look at this training session and then next week as well. So Monday, Wednesday, Friday next week, we'll be holding the same live stream. Make sure you smash the like button if you're here. I appreciate you taking the time out to be here. And, it takes consistency. Show up, listen, and you might learn something. Let's have a look at the VIX. As I mentioned in the previous live stream, we're hitting that, coming close to that downward pivot rejection point here. So we might see a little bounce on the VIX here. And if we see the bounce on the VIX, then the indices pull back. If the breakthrough happens on the VIX and we get below 2142, that's pretty bullish. And then that means fear is continuing to drain out of the market. And therefore, that will be something that we will be looking forward to as a bullish scenario. Yesterday was a huge day for Tesla post earnings. The stock popped ridiculously, almost 10%, I want to say. And today we'll be looking for a pullback into the $799 to $800 level to see if we can continue with demand being higher than supply. If indeed so we bounce on the $800 level, then I'll be comfortable playing this to the upside. But as of right now, we do not need to take any upside play on Tesla because that is going to be just greed setting in. And it can continue to run higher, but I will not be interested because the risk to reward ratio here is favoring the downside right now. Another one that we're watching here is Walmart, which has a huge gap to the upside and is breaking out. It does not have to fill the gap. Once again, does not have to fill the gap. This is something that we're just watching to see if it can partially fill a possible gap. We have some options that we're playing for this. We took it together on the Discord yesterday. But any move up into the 137.50 is a nice level here for this resistance that we saw prior. And that will be the key level for Walmart to reject, perhaps before coming back down. And then another one that we're watching is GM, General Motors. This is another great one, but we needed that break above 36.18 to really get bullish on this one. Play up to 36 for a day trade, maybe possible if that momentum is there, volume comes in. But this is kind of going up on low volume right now, so we'll see what happens, and we'll see if we can actually get that volume into this trading session. With the semiconductors, huge rally all this week, and we're obviously going to be looking for a pullback. So we'll be watching for a rejection in this zone, and if there indeed is a rejection, then we'll start to take some downside, but not before we see rejection and confirmation of that rejection. Then only we play the downside. Of course, we want to see some key levels being broken here. Pretty much 228 has to fall. 227, 228, somewhere around there. We want to see that level being rejected, and then we can see some downside move on SMH back down around the 224, 220 range, somewhere down here. That will be the short position for next week, perhaps. CrowdStrike's another one, really nice uptrend. The 61.8 extension is going to be far above at 215, but we need to get to 200 first. A break above 195 is going to be very bullish. And we'll see if we can actually get there. This has bounced on this trend line multiple times now, and we'll see if we can actually get this momentum going, get some rockets fired. So CrowdStrike's another one. Microsoft, this one's been kind of all over the place, but looking very nice, coming off that falling wedge pattern. Of course, above 269 is going to be bullish. But the run up to 269 looks good as well because earnings is next week. So a run up here would be nice. That we're pretty much seeing Apple and Microsoft and all the mega caps kind of rally ahead of the earnings next week. And that's what's really driving this market if you think about it, right? So is Apple. Apple almost at the 61.8 extension, which we were forecasting early this week. So 158 is really the region to hit before we see any pullbacks. Likely to see that within either today's session or Monday or Wednesday next week ahead of its earnings, which are also next week on the 28th, my bad. So yeah, those are a couple of opportunities. I hope that you will, learn something from this live stream. If you're here and you're listening, drop any tickers that you want me to cover in the comments right now. I'll go over them. I am done with the TA update for the indices and some tickers that we're watching. Remember, it's free game. You have nothing to lose to turn up just an hour before the stock market opens and do your due diligence with us. And you can learn some stuff, ask me questions, and you have access to me. In all, I feel this is a great deal for anyone who's looking to learn, grow, and kind of just up your game. Also, if you're here, once again, if you can, take a second out of your day and smack the like button so that we can get this stream shared with other people. I would truly appreciate it. And yeah, that would be really helpful to get this video out to other people as well. And yes, I appreciate you guys a lot for even turning up. So, Hood. Okay, let's do it. Hood. Robinhood. So they had some news, right? This stock has a news catalyst. I think they're allowing day trading. They're allowing day trading for cash accounts, right? I think that was the news. 953. So I have an alert set here. Above 979 is where the trigger for the upside will be. And then we have a profit target at around $10.50 roughly. You definitely don't want to exit around 11. You want to exit closer to 1050 so that you capture a majority of this move here. So taking it above 979 and then playing up to 1050 is the play here. Taking the upside here, the risk to reward ratio isn't that great, I'm gonna say it right now. But if you do play it, then you got to take this as a day trade / scalp. That would be the best outcome for you. So let's look at the risk to reward ratio here. Let's say you enter somewhere here, right? You would have to go risk off. 1050 would be your exit. So you're looking at your risk off has to be 946 for you to achieve that. So is it a likely scenario? Maybe. You know, you never know. But I personally don't like this setup, so I will not be playing it. What I do instead like is, let's wait for that 1050 breakout. Then the risk to reward ratio changes significantly, right? So if you wait for this 1050 breakout, then you have much more upside, right? Provided this wave goes all the way. Break above 979 will simply give you the thesis that bulls are on their way to get to this resistance zone. But also, if you look at the volume profile, let's have a look at it together. Boom, boom, boom. Let's have a look. So the point of control is 1235, or you know, all the way up to 1337. So you do okay. So there is some upside here, but we need to break this key level first. 1050 is the level to break. So you can see that very clearly, right? This is the point of control level, and 1050 is really the level to bounce on. So breakout 1050, bounce 1050, and then there is a play to be made all the way up to 13 bucks or so. So this is the key levels here, and then we can draw a fib after that as well to kind of gauge our entry and exit levels all across here. If you want to use this wave here, you probably could, but I would probably use this wave instead. Going by this bottom to top here. Boom, boom, boom. Let me just change my fib setting real quick. There we go. Okay, so if we're looking at the fib settings here, and let's see how this lines up. Okay, very quickly. So 1050 is actually the 23.6 Fibonacci extension. So that's actually not too bad of a target from here to here. But once again, I told you, you got to look at the risk to reward ratio to the upside here. You would have to be really risk off at around $9. And then take this upside all the way to 1050. That would make sense. That means you have a 1:2 risk to reward ratio. And then above that, you're looking at a upside all the way to $13 or so. So I would rather play this bounce and have my risk off somewhere here. This gives me a much better scenario. This is your risk off, and your risk on is all the way up here. So this much risk for this much reward. Does that make sense? I hope that helps you out. JP Walton 951. I hope that makes sense to you, and I think that's a much better scenario to play Hood than to play it up here into 1050. So I would ignore it for now, let it marinate till it gets to 1050, bounces on 1050, and then start you know, getting into these $13 levels. That's where the volume is pretty much. So I hope that's helpful to you. Cool. Any other ticker breakdowns that you guys want me to do? Go ahead, shout it out. I'll cover it for you. Remember, price action is king. So as you know, if you will look at like my charts, I know many of you might look at it and be like, "What the hell, T? You don't use any indicators?" I don't. When I'm day trading, I'm strictly observing price action, level 2 data, the tape, and that's what I'm really looking at. I'm not really looking at any indicators. Moving averages and majority of indicators are all lagging indicators. The only indicator that I do use intraday is VWAP. And the VWAP indicator is mainly on the smaller time frames, like the 5-minute time frame. So yeah, I only use VWAPs, if that makes sense. I know that I get a lot of inquiries on Instagram sometimes, like, hey, realize that you don't have any indicators. Why do you not use indicators? Well, I don't use indicators because I don't specifically like indicators. They're mostly lagging. I like price action, and you know, I've been studying price action for a really long time, so I kind of have mastered that. But at some point of time, you know, you would get there. It's just a matter of the 10,000 hour rule. All right, do we have any more tickers? Let's see. I'll give it another 1 to 2 minutes. If you guys have any more questions for me or comments, if not, I'm gonna keep it short and sweet and X out the stream here, and then see you guys back on Monday again. We'll be watching, you know, a lot of these stocks and trading them with the live trading session on Discord with the team very soon. So I'll be prepping for that in a bit. Yeah, no problem at all, JP Walton. I hope you enjoyed the breakdown, and I'll see you on Monday again. So Yeppers, I'll also see some other tickers that we've been looking at for the past couple of days. Do we always do volume profile and fib levels as prep work before taking options positions? Absolutely. You should definitely know where the volume profiles are. As a good example, try to pull back your chart as far as possible in terms of the visible range. This visible range indicator that I use is it's not for the session, it's for you know, across the whole volume. So you have volume that goes this way, and then you have volume that goes this way. This is per date volume, this is per price volume. So observing both volume profiles are important, because just knowing that the volume is above average or below average is just not enough. Like for example, this volume down here, you can't really tell if it's bullish or bearish, and neither can you tell if this volume here is bullish or bearish. You gotta line up the volume together with the price action in order to get that whole picture. So if you zoom out, like for example on Apple here, you can see that there are some very definitive points which give you that volume bounce. This one right here, this one right here, and then these down here, right? This is where majority of price action was traded. And then anything else in between that has a gap here like this is where liquidity pockets are existing and price action is likely to slice through like butter. And that's the reason why you're seeing Apple now, after crossing this big volume gap over here, which is where we are right now, or rather just crossed, you can see that above it is a very little bit of volume, and now you got to kind of zoom in into this time frame to kind of figure out where that volume profile is. So now over here, if you get in too closer, then you can see, okay, where is the next volume profile that is going to be, you know, seeing most least resistance or most resistance. And you can see Apple doesn't have much volume between these two zones. So 158, which is exactly where my target is, you can see it lines up perfectly with the next volume node, and that's where we're likely to face some resistance, right? So that's, listen, this is not hocus pocus or some magic or some indicator that's going to help you to you know, get it right all the time. Okay, I'm gonna be real with you, because the, you know, trading isn't about like getting the right indicator set up or whatever. It's all about practice. It's about looking at price action, and it's about understanding supply and demand, right? Where you see that there's a lack of price action is where there is no supply and demand, right? And here is where supply and demand comes in. So where supply and demand has been before is likely to see another pop in action where supply and demand will come in again. And you can see that it lines up with this dual zone right here, where both supply and demand was existing. So it's quite straightforward stuff. You just got to put it in practice and always keep it at the back of your head that these are the things that you need to check out. And before you take a trade, always look at those things. It's like a checklist, right? I hope that's helpful to you in some way. But yeah, fibs are a good way to, so apart from that, fibs are a good way to kind of get down the interim support resistances between levels, and then find the ratios between these waves. But plotting fibs is for another lesson, and that's for another time. It's quite complicated. It takes me almost 2 hours to do a Fibonacci class when we're doing it during the live classes. But unfortunately, we're not holding any of those anymore. But trust me, in a couple of months, in the end of August, we'll have some good news, and then you can learn fibs from me in a different setting altogether. So more on that later. But for now, just, if you have any questions about fibs, I can always answer them, but it does rather take a long time to teach fibs. Well, great. Awesome. Well, I hope that today was informative in some way. Always, look at things objectively. Stay cool. It's about to be an interesting trading session. Volatility is kind of low, but let's see if we get any flushes or rallies today, and we'll play it by then. I'll see you guys back on Monday, and we'll take it from there, guys. Take care, peace, and yeah, Monday. Bye, guys.